Hi everyone, it's Nick here from TraderLion with When to Take Profits Part 2. So the first one I kind of covered more of when to sell, when to look to take profits for the long haul, but I'm going to get into a little bit more specifics here and focus especially on the swing trade aspect. In order to know when to take profits and have the best edge in the market, you have to know how stocks typically act. From base to base, a stock generally moves 20 to 25%. So it normally has a 20 to 25% run before it starts to consolidate again. Later stage bases are more failure prone than early stage bases, and you'll see exactly what I'm talking about in the next slide. So this is a chart of AVGO, and you can clearly see that you have the first stage base. It breaks out of it, so this is your buy right here, and then it moves, and then it forms another base. Moves up, it forms its third base, and it broke out of that, and then it finally failed. So this is a later stage base, this is the third stage, and you can clearly see that the third one, it started to weaken a bit. And so the base count resets because we undercut this base is low. So if you're position trading, this is an opportunity to keep adding onto your position. You don't want to get shaken out. There were a lot of red weeks here, you could see, especially when it falls back in. When you bought it around $70 and then it falls back around $70, it looks like a sell, but it's just forming its second base. So these are very hard to sit through, but when you have the right stock, you want to hold on to it for as long as possible. So now something that is becoming pretty popular is when the stock does start to be consolidating and forming that next base. If you're an active trader, you can actually sell and take your profits and then buy it back when it's ready to break out again. So that way you're not sitting in the consolidation. So this image is just to show you the bases, kind of the average move between bases and what to expect. The 8-week rule. If your stock rises over 20% from the correct entry point within 3 weeks, you hold that stock for at least 8 weeks. And this is coming from William O'Neill and from all of his research that he has done throughout the years on the market. If a stock has a strength to move 20% or more within 3 weeks of breaking out of its base, then it has the potential to be one of the biggest winners across the market. And we saw that with AVGO on the last slide, and there's many other examples as well. Now, why do I bring the 8-week rule up in the when to take profits? Because if your stock moves 20% within 3 weeks, you want to hold on to that. If it moves that much, it's likely going to sell off pretty hard. There's going to be lots of profit taking, and so it's very hard to sit through. So this 8-week rule is really good. If you have a stock that moves 20%, you just hold on to it. And so if you follow this rule, you'll sit through that sell-off no problem. It might be a little hard to do, but if you adhere to this rule, it'll give you a guide and it'll make things a lot easier. Now, this only applies to leaders. This does not apply to any stock. If a penny stock moves 20%, you don't hold it for 8 weeks. This applies to can slim quality growth stocks. You always need to have a plan. So our plan with swing trades is we take partial profits on swing trades at 5%. Once we take partial profits, we move stops to even, and therefore there's no risk. It is very easy to get 5% on a stock, and so this keeps us consistently taking profits out of the market. You're only trying to catch the momentum with swing trades, and so you want to keep tightening those stops and moving them up. So we move them up every 5%. And this keeps us in trades for quite a while. And the beauty behind it is after you hit 5% and you move your stops to even, you've now taken profits out of the market, and you have no risk on the stock. So it's much easier to let it sit. Patience is key when it comes to making big profits in the market. And so it's a lot easier to be patient when you've already taken your profits, and now the worst that can happen is the rest of your position stops out at even. So no matter what, you're walking away with a profit. And so this is something that we find has been very good, especially for the members at TraderLion, because everyone wants to keep taking profits. Everyone wants to keep making money. And so this 5% rule really helps people consistently be able to do that. The reason I highlight this on the slide is because there is no rule for selling. There is no general rules. You have to make the decision for yourself when you're going to sell. And that's often the hardest part of trading. Buying is very easy. Selling is very hard. So if you have a plan and you follow that plan, then you don't have to think about when do I sell it? Should I sell it here? Should I sell it then? You have a plan now. It hits 5%. You take profits off, move your stops to even, and then that's it. So this gives you a plan. You don't have to think about when am I going to take profits. You don't have to worry about riding it all the way back down. Here's your plan, and it's very profitable. So I just wanted to show one of our older position summaries. You could see that the position trades are more common to get 50% gains. And this is because we're keeping stops wide and you're really letting that stock move around. So we bought Goose originally at $20.73, and at the time of this, it was about $35.56. Now, if we look at the swing trades, the ones that we do the 5% rule, you could see that this works very well. We held HLT for 91 days, Walmart for 78 days, SLB 42 days, Lowe's 30 days, BlackBerry 19 days, and Melly for 7 days. So why does this plan work? Why do we keep sticking to this plan? Because Walmart did not go directly from $85 to $108. It would go up, it would go down, it would go up, it would go down, and it would be very hard to sit through. So by having this plan, everyone has already taken profits at 5%. So at 89.25, we have taken profits. We took half off of this, and now we just keep moving our stops up. So you're just locking in more and more profit. And you could see that we get really good moves. We get an average of 15% moves on our swing trades. And it's a lot easier for everybody to sit through because they've already taken money out and they've taken the risk off of the table. So the point of this presentation is have a plan, stick to the plan, and you want to understand the general characteristics of stocks, how far they move between bases. Also related to the video from yesterday, with price action, you want to know, is this a light volume pullback? Is it a heavy volume pullback? And that's also going to help you know. So there's definitely an art side. It's not all science, and we spoke about that. But by keeping rules and having a plan, you never have a question of should I sell here. So by this trading plan, it makes it easier to hold, and it guarantees you making money on the way up. So I hope this video was helpful. Wanted to keep it real short because some of the videos have been getting kind of long. If there are any questions, just ask me. Of course, I plan on having a When to Take Profits part 3, but I really want to hear your questions first so I can dive into them in the next video. Have a great rest of your night, and I will see you all tomorrow.